Thank you so much, Dr. Faisal, for that really inspiring and very, very informational keynote. Ladies and gentlemen, esteemed guests, we now move on to the first plenary of the day, Impact Through Institutional Investment. Our other esteemed speaker on the panel, please join me in welcoming my good friend, Cliff Pryor, who's also the CEO of the Global Steering Group for Impact Investing. Let's have a round of applause for Cliff.
Thank you, Naina. Thank you.
So what we are going to discuss in this panel today actually is, it's a really interesting panel from my perspective because Cliff has, we're really fortunate to have him here. He has a long history of working with impact through his career, and he is going to share his insights from a global perspective, while we have Dr. Faisal here, who can actually help us relate it to a Malaysian perspective. And I'm really excited about that because it fits in so nicely with our overarching theme of global challenges and how do we come up with relevant Asian solutions. So I'm going to start with you, Cliff. From your perspective, both as having been deeply involved in the impact space for most of your career, and then most recently with the Global Steering Group, can you tell us why, firstly, what is the sort of trajectory you've seen in terms of the interest around impact investing? And what are the key themes that you have identified that impact investing is well poised to address?
Thanks very much, Naina, and thanks for the opportunity to be here, and what a wonderful group, and what a wonderful, truly wonderful first start this morning. That was absolutely astonishing. So, impact has been growing in volume, growing across more countries. But when we think about the themes, many of them have been around for a long time. Poverty alleviation, education, healthcare, agriculture, the use of tech for good. Some newer areas are coming along, and I would say they're mainly around nature. So biodiversity, oceans, a recognition that soil is important and absolutely crucial for our future food. And we're starting to see systemic areas as well. And I suppose the best example of that, and the most important example of that, is gender, which encompasses all of the above and more. But the single most overwhelming issue is climate. The transformation to clean energy, climate mitigation, climate adaptation, greenhouse gases to clean energy. And this is something which is essential and urgent and incredibly powerful. Many of you will have heard about the droughts, the fires, the floods, the 1,000-year experiences that have happened over the last year. Just to take two examples of that, Pakistan, a third of their landmass underwater, nowhere else to go. In India, 200 million people with over 50 Celsius temperature for 2 weeks. The life expectancy at 55 Celsius is almost zero. We're that close to the edge. So, urgency. And I would like to say to people, I know many people will talk about 2050 for net zero. I think that's way too late. Way too late. We need to be thinking about 2030 and with great urgency. And this isn't just because of the climate, it's because of the consequences of the climate on people, particularly on vulnerable populations who have nowhere else to go and don't have the money to get to somewhere else. Absolutely disastrous. The climate change is the global challenge for vulnerable peoples. So what are we going to do about it? And what is the impact movement going to do about it? Well, to my mind, the financial system is the most powerful agent in the world. So let's change the financial system. Let's change the financial system so that it makes it easier to do the good stuff and harder and more painful to do the bad stuff. We are seeing global standards. We're seeing reporting systems, transparency, taxonomies. We're making impact the norm. We're building the crucial impact tools, things like having wholesale funds, particularly in emerging countries, so that it can be in local currency. We can look at things like outcome funds. We can look at the sovereign funds, and wonderful to have that in Malaysia. More countries with impact practice, the National Advisory Board system that we work with for impact, and I'm really delighted actually to be able to say that this is the day where Malaysia launches its task force, working towards a National Advisory Board for impact investing, designing its own vision, its program, its call to action. Really wonderful to see that alongside colleagues across the region through collaborations like AVPN and Hasanah and Khazanah and so on. Each country has its own opportunities, its own problems. We're focusing on the opportunities to address this better future.
Thank you, Cliff. And yes, you said we don't have time. We're running out of time. And climate action, which we know well in this part of the world, Dr. Faisal, the effects of climate change, the effects of economic inclusion or poverty alleviation, looking at nature-based solutions. How are these themes resonating with you here in Malaysia, and are they influencing investments that you make at Khazanah?
Yes, I think the themes that Cliff mentioned, I think what you said, I mean, we do see the themes, and of course, Dana Impact has a role to play in that and achieving that. But actually, it's interesting that you mentioned that, because when we first started out Dana Impact, we wanted to do good, right? So we wanted to do good, and therefore, but it was we needed to focus on the areas that would actually catalyze or have a good impact on the country as a sovereign wealth fund, and in two forms. One is to improve the global competitiveness, the country's competitiveness, as well as the resilience. So it's like an offense and defense strategy. Now, but we looked at the megatrends, and climate came out strongly, obviously. But as a nation, we needed to look at what other things that we should also look at as well. And looking at the megatrends, digital and technology is one, health and education. When we looked at security of energy as well as food security, those are also something, and I think COVID really showed us that, right? And of course, climate, but also things like income inequality, decent work, and social mobility was also something that we needed to look at, as well as I said, the offense, which is globally competitive. So those are like the 6 themes that Dana Impact is poised to do. And it's a big task. And this is where, because it's such a big task, and knowing that it does resonate, I mean, you talk about climate, that's huge. We're not just looking at Dana Impact per se, for climate at least. We're looking beyond that. We have portfolio companies that have a role to play. We also have some of our existing investments already in sustainability, for example, that we will try to create a better platform for more impact in that manner. So we have Dana Impact, actually, not just Dana Impact, but all our companies looking at the challenges such as climate. But for Dana Impact itself, there are other things that we would be looking at.
That's interesting. So Dana Impact is one way, but you're also looking at all your portfolio companies to really look at how they are much more sustainable, how they are actually, what is the footprint that they are putting on in their own operations. In your keynote speech, you spoke a lot about partnership and collaboration and the 4 Cs. I think we at AVPN also believe that our mission is to mobilize capital for impact, and such a mission cannot be actually achieved at all without partnerships and collaboration. And the 3 of us sitting here is a good example of partnership and collaboration, because the conference has come about as a strong collaboration between YH and AVPN. GSG and AVPN have had a long-standing collaboration right from the very beginning, and I think without collaborations we can't move forward. In that note, when I spoke yesterday, I talked about a collaboration that AVPN has with the Monetary Authority of Singapore to build a platform for solutions, because when we are talking about impact investing, we also need to have a pipeline of investable solutions. And in the spirit of collaboration, I'm also very delighted to announce that we have 3 other venture philanthropy networks, or 3 other impact networks that are looking at mobilizing capital for impact across geographies as diverse as Asia, Europe, Africa, and Latin America. And these 4 have come together in a group called GAIN, or the Global Alliance of Impact Networks. And they are going to be working together with AVPN on this platform of solutions that can be tapped into by financial advisors, by investment advisors, and financial institutions to really build up a pipeline of investable opportunities. So talking about investable opportunities, Dr. Faisal, I want to ask you about Dana Impact and just understand a little bit more, what are the kinds of organizations that Dana Impact actually invests in, and how do we actually look at scaling those organizations?
Thank you. So just for everyone's information here, Dana Impact, we've allocated 6 billion ringgit over 5 years. And it sounds, as Malaysians, it sounds quite large, but when you actually translate it to US dollars and looking on a per annum basis and you compare it to what's being invested outside of Malaysia, it's not that large actually. Right. And this is where, because of that, we do have to leverage on partners and have to have that collaboration. I'll give you 2 examples. One example is what we're doing in the digital and technology space and how we're doing it and who we're doing it with. And then also with our own foundation, which is Hasanah, what we're doing and what we hope to do with them. So like in digital technology, we're looking at ecosystems. We're looking at building an ecosystems, and there are already many players in there. But as we all understand, and some of the people in the audience here are venture capitalists and from the investment community, and we know that as a country, we may have been falling short of our neighbors, for example, in trying to have that whole ecosystem of startups. We have investors coming in at Series C onwards with slightly less risky competitive venture, but coming up with more and more of them, it's something that we're looking at and how to address. So here we're looking at partnering venture capitalists. Now we are pretty large, and for us to actually nurture that space, it becomes difficult. So we actually put money in some VCs. And how we do it is also important. So we actually chose 500 and Gobi. They're international investors. But it's also to make sure that people can see there's actually opportunities that might attract other global venture firms. And it also increases the knowledge base of local startups on how to get to that level. And then at the same time, we look at corporate ventures. We have a lot of portfolio companies. These are listed companies, but for them to make investments in venture, it's pretty risky. So this is where we try to group that and try to set up a platform where people can leverage on. So we brought in Plug and Play, for example. That's where all the corporates can actually participate. We ourselves are a corporate partner of Petronas because they started their corporate venture. And of course, understanding all of that, there's an ecosystem. I mentioned to you about getting the talent pool in that space. So again, we're partnering people. So what we're doing is we're looking at gaps and identifying participants that can give them that boost. And slowly the whole ecosystem will come into place. The other thing about philanthropy. Now I think I mentioned digital technology because this is a space where as a financial investor, people are looking for double-digit returns in a 3 to 5 year time frame, and it has to have scalability and hopefully a next unicorn, right? So but when I actually go to the other space, this is where I'm working with Hasanah, it's a different space altogether. They help a lot of social entrepreneurs. So how do we continue enhancing that life cycle for the social entrepreneurs beyond just grants? How do we actually try to spur that as well, because they're creating impact? And then at the same time, there's a lot of investments that we have in place, which is actually quite useful for the social entrepreneur and vice versa. So a lot of our portfolio companies it's worth deepening that network with a lot of the relationships that Hasanah has, getting that ecosystem so people know what each other are doing. And of course, talent, education, I think you mentioned that as well. That's actually quite key as well. So yeah, that's how we partner.
I think you've actually said some really relevant things here. You know, one is really looking at what is the pipeline and how it is different for different pools of investors, and how do you, as a sovereign wealth fund of Malaysia, actually work with these different groups. You talked about VCs and working with VCs to target a particular size of investment. You talked about working with foundations like Yayasan Hasanah to really look at social enterprises that are just in the beginning of their journey. And you talked about how you can look at corporates and your portfolio companies in terms of what they bring to the table, both in terms of corporate impact venturing and really looking at mentoring some of the social enterprises that are really at the start of their journey. And I think for the audience, this is something that's really important, because sometimes what happens is when we're a social enterprise or we are a social entrepreneur and we're looking at scaling, or we are a startup impact fund, we go often to pools of capital that are not really ready to look at the tenure, the amount of time it's going to take to actually generate a positive capital return, much less a double-digit one, and also to look at the finance plus kind of investment and support that you will need. So keeping those things in mind, I think, Cliff, we hear so much about blended finance and it being the silver bullet that will actually solve some of these problems. So let me ask you a little bit of a difficult question. Where does blended finance come in? How does it address some of these gaps? Does it really help enterprises from falling off into what we call the valley of death, or the pioneer gap, or depending on who you're talking to? So what's your experience of blended finance?
I completely agree with you that last year was, blended finance was all the rage. Everybody was talking about it. I'm not sure that anybody was doing it last year. Can I cheat a little bit and just say, who thinks blended finance is valuable and necessary, maybe even, in their work? Who would see it as, okay, that's quite a lot of people. Keep your hand up if you've actually found any blended finance. Okay, I think that just tells us where we are. But there is somebody over there. That's good. Look, blended finance is crucial to get many kinds of initiatives started. Whether that's a first mover in a new area of work, where after a bit of blended finance, actually it can be viable on its own, or whether you're actually tackling a problem which is going to be a long-term problem, and you will always need some level of concessionary finance or what it might be. But blended finance isn't just about giving a cash amount. It can be about technical assistance. It can be about investment readiness. It can be first loss guarantee. It can be insurance. There are so many different tools, all valuable and valuable in different circumstances. We had a lot of work last year with the G20 on blended finance, and there are now a number of very skilled, very helpful organizations. Convergence is really useful. The C3, Catalytic Capital Consortium, which is putting out money using blended finance and then doing the research to understand where that blended finance is most useful. And the Global Blended Finance Alliance, based in Indonesia. So we're seeing it coming more and more and more. The big question is, where is that blended finance coming from? And some governments are doing this. The IRA in the US, when you look at that huge program, just how much of it is actually blended finance. DFIs have started working on it. There's corporate support from some areas, individual investors, foundations, and it's really wonderful to have the sovereign agencies in Malaysia. That creates the possibilities. And as we get more understanding, we need less blended finance because we're using it more effectively. So I think next year has to be a whole load of hands that are still up when I'm saying, have you found any?
Absolutely, and amen to that. And I believe that I'm going to do a shout out to Convergence, which is one of our partners who's actually trying to promote blended finance in the region. But Dr. Faisal, coming to you, you know, when I talk to a lot of investors and I talk to them about impact investing, I think one of the things that we always get stuck on is metrics. How do you actually measure impact, and how do I really decide whether or not I'm going to put my money in education, in technology, in health? I would really love to understand a little bit about how effective have you found impact metrics, and what is the role that they play when you are deciding on your investments?
Well, first of all, I think it's extremely important that we have a good measurement tool. And for Dana Impact, for example, any opportunities that come by, that is something that we look at. We do apply our metric. The metric that we have, I mentioned in my speech, is SMARA. We call SMARA. And I think one of the important things about this measurement is not only having the internal comfort that we can actually measure the concrete impact that it has, but also have something which other people can understand as well. And why I say that is because we want to have some form of understanding, at least a commonality of the measure for impact. With that, I think we can scale a lot further. And I'll give you an example. So in coming up with our own metric, Samara, we went on this journey quite a while back. I'm not quite sure, it was perhaps 10 years ago, and looking at the true value of a company. Looking at the true value, the benefits that it has, which now is translated into the ESG, but also the external benefits. But it was very, very difficult because of data. So the current approach, or the updated approach right now, while we still start with the value of theory of change, we actually looked at frameworks that other people are using. So we're using our partners. So we are a sovereign wealth. We invest in other funds as well, and we learn how other people are doing it. And there is a framework, IMP 5, right? So Impact Management Project 5. So that's a framework that's being used by many. So we've adopted that and applied it. And of course, we have to contextualize that in order to make it relevant for Khazanah. Now, one of the things where we do see how impact investors are doing differently is while they have a framework, some would choose to put in a dollar value to that impact. From our perspective, I think understanding the thresholds is slightly different, because what we found, at least in the first round, is perfection was actually blocking people from doing good. And this is where we want to progress directionally first, and we will continue to iterate what we have and learn from other people. And I think that's how we approach it, yeah.
No, and I think universality, adopting something and sharing it with others, what you have adopted, so that your partners can learn from you. I think looking at tweaking it to your own context, these are things that are really important. At AVPN, we have also worked with the IMP project and those principles, and I feel like it is really crucial, and I think everyone in this room will agree, one of the things that we need to work on is impact metrics and getting standardized impact metrics so that the impact investing industry can actually move much faster than it has done today. We have come to the end of time, and so I'm going to wrap up this panel. Thank you so much. Could I have a show of hands for my esteemed panelists? Thank you.